In this video, I'm going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from November 15, 2021. Okay. So this technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. Okay, so this way we'll be able to get the most accurate results as we are getting for last couple of weeks, couple of months. Okay, so this is the weekly chart and these are the weekly candles. One candle represents 1 week. If you remember or if you have seen my last video of Dow Jones technical analysis for that November 8th, okay, last week, then I have in that video I had clearly mentioned that see, market is going to come down, market will come down. Okay, and whenever market comes down, then it is going to it is expected to hit the moving averages and the support. In this case, the market came down. Okay, it hit the support. Secondly, on the daily chart, if you see on the daily chart, okay, so when this market came down, it hit the support, it hit this particular support. Okay, means sorry, this particular moving average. Okay, then it hit this particular moving average, it crossed, and then it was supposed to hit this moving average, okay, which was around 35,800. Okay, but because of this news in two or three stocks, okay, particularly in Facebook and J&J, and there was one more stock. Okay, so the market moved up sharply, and when the market moved up, then all of the other stocks, okay, the prime movers of the Dow Jones, okay, they helped the Dow Jones to move up. Anyways, we were on the weekly chart. Okay, so on this weekly chart, let me first talk about this candle that was formed for the week of November 8th. It is a bearish candle, a heavy bearish candle. Okay, but it's in the bull trend. A bearish candle in the heavy bull trend, okay, it is an indication that market is going to rest. So here, okay, as such there is no problem, but the problem that is here, okay, if I show you the closing of the candle, okay, it is on the margin line. The closing of the candle, okay, it closed around 36,100 something. Okay, it was 36,100, whereas this the support, okay, in this case it is resistance, it is 36,109 or 108. Okay, or we can say like 36,110. Okay, so this weekly candle, it closed below 36,110, but is still on the margin line. So 5 or 10 points are nothing. So market still can retrace. So this is the point of concern. Means here the market, okay, means we exactly do not know whether market is going to come down or move up. But if we follow this this particular uh, support or resistance, in this case it is resistance, then market is expected to come down. But it will be more clear on the daily chart. So when we will analyze the daily chart, then I will tell how it is going to work. But anyways, as of now market is on the margin line. Okay, and we are not sure what is going to happen as such. Okay, so we'll analyze the daily chart and then we will see, and accordingly we will plan. So this is the bear candle. Okay, and a good or a heavy bear candle. Heavy bear candle means the next candle that is expected to form, okay, that candle, okay, it is most likely to be a bear candle, okay, or a very what we say, very light, okay, or very thin this bull candle. Okay, or we can expect a bull candle, like, so first it may come down and then it may move up and then it may form this kind of cusp, okay, or this kind of bullish hammer. Okay, anyways, let's do the technical analysis here. So market is above the median of the Bollinger Band. Okay, in the bull side of the Bollinger Band it is bullish. Market is above the moving averages. There is a clear fan out. It is above the moving averages. It is bullish. Market is above the Ichimoku cloud, it is bullish. Okay, and the other technical indicators that we have here is okay, so these technical indicators are okay, so these technical indicators are, first we have the MACD. MACD is marginally bearish, sorry, marginally bullish. If you see, MACD is 654.54 and the signal is 652.62. So it is marginally bullish, marginally bullish. Okay. Then we have stock RSI. Stock RSI is bullish, no doubt. Stock RSI is bullish. Now MACD is supporting the stock RSI. So which is this thing is is in favor of bulls. And then we have the divergence. So divergence was means divergence was increasing here. Okay, and it was 65. So this was the reason I told you, because 65, like 65, 67, 68 is critical for Dow. Okay, and this was the reason why I told you to sell in the week of November 8th. Okay, but now the divergence has cooled down to 63. But if the market remains here, okay, or if it moves up, then the divergence will also increase. Okay, so but as of now, divergence means it may create a problem, but as of now it is not not saying anything clearly. Anyways, momentum is in favor of bulls. Okay, because it is almost 40, but means momentum is not much, it is not much. So it cannot give the direction to the market, so it is just 40. Okay, so it has to be like 60, 70, or more than 70 in order to confirm the trend. But as such, considering all of the technical indicators on the weekly chart of Dow Jones Industrial Average Index, okay, the market is bullish. All of the technical indicators on the weekly chart, market is bullish. Okay. Anyways, let's get back to the chart. So we are here on the chart. So now let's go to the daily charts. Okay, to see like what is most likely to happen. Okay, day by day in the coming week. Okay, so we are here on the daily chart. This is the daily chart of Dow Jones, and these are the daily candles. So one candle represents one day. Okay. Anyways, so uh, first, let me show you this thing. As on the weekly chart, okay, I have shown you that this candle, okay, it's a bull candle, and the interpretation of this candle is that market is expected to move up. Okay, means the next candle that is going to form on Monday, okay, it is expected to be a bull candle. But if you see the closing of the candle, then the closing of the candle was below this resistance. Okay, this resistance is at 36,110. Okay, so it is on the margin line, now let me tell you something else. If you see these two candles, okay, on two consecutive days these candles closed above this 36,110, and that was the reason why this, sorry, that was the reason why this particular candle was seen, and then this candle. Okay, because market closed above 36,110, and this, and it helped the market to move up. Okay, but now here after these two candles, if you see these two candles, okay, so these two candles have closed below this 36,110, but this last candle is on the margin line, so anything can happen, but most likely, okay, means if because of this 36,110, okay, means yes, we can expect a variation of 5 or 10 points. But I am expecting that the market, okay, it will hold here, or it will try to come down. Means even if it tries to move up, then also it has to come down to hold. So until and unless, look, now how we are going to trade here. Okay, so the trade setup is, if or only if the market closes above 36,110 on 2 consecutive days, just like this, then only you are going to buy. Okay, so if market uh, closes above, closes above this 36,110, okay, then only you are going to buy. Let me write it down. Then only you are going to buy. Okay, and if the market remains below this 36,110, and here again we are looking for the 2 consecutive candles, 2 consecutive closings. Okay, remember, 2 consecutive closings. And if the market closes below, in that case sell. Okay, if it closes below, sorry, if it closes below, okay, in that case sell. So if it closes below, in that case sell. Okay, so this is the trade setup for the coming week. So if market closes above 36,110, in that case it is expected to move up and to hit this 36,600. Okay, so this 36,000, what was it? It was 36,650. 36,650. Okay, it was 36,650. This is 36,110, and then we have support here. Okay, and this support says the support is 35,700. Okay, so this support is 35,700. Okay, so this support is 35,700, and also this support is very, very critical because this moving average is here, the confluence zone is here, and then the support itself. Okay, so this is very, very heavy and very critical support. Whenever market comes down, it will find very heavy support here. Okay, and if market crosses this support, then market is going down. Okay, means going below 35,000. Okay, so these are the three critical support and resistances, and this is how we are expecting the market to move. Okay, always look for the 2 candles, 2 consecutive candles. They must close above 36,110 in order to buy, otherwise sell. Now technical analysis. Okay, so if we see the technical analysis, so if we do the technical analysis here, okay, market has closed above the median of the Bollinger Band, which means the market is bullish. Okay, market has closed above these three moving averages, fan out, market is bullish. And now if we consider other these technical indicators, then we have MACD. MACD is bearish, it is clearly bearish. Okay, and then stock RSI is bearish. Well, this is the perfect combination, this is the perfect thing, okay, where market is supposed to fall. So in this case, what I am expecting is that market is forming a lower high. Okay, so lower high is formed uh, when the market is coming down, then all of a sudden market moves up. So market may move up, okay, just like this candle, it may move up, but then it will come down and it will close. So if market moves up heavily, and if market close below this particular 36,110, then for sure market is coming down, because MACD, stock RSI, and divergence all are saying that market is going to fall, market is going to come down. Okay, so MACD supporting the stock RSI, perfect combination. Then we have the divergence indicator. Divergence as of now is normal. Okay, but if it moves up like 65, 67, 68, or 70, then for sure it will create a problem in the market. Then we have RSI, the momentum. No momentum. There is very little momentum. Okay, so yes, in the coming week, okay, we may see some momentum. Okay, and this momentum will form when there will be any is when the market will move in a particular direction heavily. Okay, anyways, So through all of the technical indicators, particularly through these moving averages, okay, Ichimoku, and through the Bollinger Band, market is bullish. But through the other technical indicators, which are very, very critical, okay, and that is the MACD and the stock RSI, market is bearish. Okay, so and everything will be defined here, or means the coming week, everything will be defined by this 36,113. Okay, so it will define the fate of the market. Okay, so this was the technical analysis for Dow Jones Industrial Average Index. Okay, and I have also shared the link to my Discord group, okay, in the description of the video, and also in the comment section you can take a look. And also I have shared the information about my programs, options trading programs. Okay, so you can take a look, and if you want to participate, then you can participate in the options trading program. Okay guys, so this was the technical analysis for Dow Jones Industrial Average Index for the week commencing from November 15th.